So in all my videos, I usually say that you get only 2 valid order blocks per structure, right? So it doesn't matter if you're trading 5 minutes, 15 minutes, even 1 hour, 4 hours, you always need to see only 2 valid order blocks per structure. So in this structure, I have marked only 2 valid order blocks. It can be 3, it can be 4, it doesn't matter. You should be able to filter it and minimize it to only 2 order blocks, right? So when you're trading very small structures, tiny structures, sometimes you get only 1 order block. That's completely fine. You can trade that using the lower time frames. But usually when you're structure mapping, when you're using market structure, there are only 2 order blocks, okay? So the issue that I see with most people is they're using limit entries, right? So it's like they don't learn more than limit entries. There are, like I say, there are stop entries, there are confirmation entries. And if you're only losing limit entries, your chances of losing is very, very high because limit entry is very, very psychologically tough to take, okay? So like I said, there are only 2 order blocks. The first order block has 50% win rate. The second extreme order block has 80% win rate. So the issue is they just take 2 limit entries like this, one right here and another one right here. This is a bad approach to trading the market, right? So the reason is, first of all, limit entry is very hard psychologically. When the price is coming down like this, and you're betting on the market that the price will mitigate this order block and go up, it's very tough on your psychology, right? So that's the first issue. The second issue is there is still liquidity present in the structure. So this is the liquidity, right? So this is a very strong liquidity point. The market will always go up or down only after mitigating enough liquidity, right? So there is enough liquidity present here. Why should the market mitigate this order block and go up without mitigating or hunting this liquidity, right? You should ask these questions to yourself. So this is a 50% win rate order block. So you should not take limit entries in this order block. So what else can you do? That's the question, right? You can do 2 things. The first thing is, which I recommend the most, use 1-minute confirmation entries. So I have already made a video on that one. It's an exclusive 1-minute video. Check that one out. So the second thing you can do is use stop entries instead of limit entries. I also have made a video on that one too. Check that one out. So I'll just give you an example on how this actually plays out in the market using live examples. So when you take limit entries in the 80% win rate order block, that's completely fine. Okay, so that's completely fine because there is no more liquidity to be hunted by the market. The liquidity here will be taken, this OB will be mitigated. Orders placed in this order block will also be used as liquidity when the market mitigates this order block, right? So the chances is 80%, as I have mentioned here. So you can obviously take limit entry here. So when you want to take entries in this point of interest, in this order block, like I said, use stop entries. If you are a beginner, best use confirmation, 1-minute confirmation entries, right? So okay, so that's what I want to tell you guys. Let's look at a market example which happened today. All right, so let's go to 15 minutes. Okay. So guys, if you haven't joined the Telegram, join. I usually give these kind of predictions, and this is the prediction I gave today, and it's working out pretty well. Okay. Okay, if you see here, this is the entire structure according to my market structure mapping method. So this is the entire structure, right? We got a breakout structure right here. This is the extreme low. So the market, if the market breaks this low, that means the trend has changed from uptrend to downtrend, right? Okay. So let me just bring that structure also here so that you can understand this clearly. Okay. All right. Okay. So if you see here, this point, right, this breakout structure right here, I'll just make this, okay. This breakout structure right here is nothing but this one right here. And this pullback and a small breakout structure, a minor breakout structure is nothing but this one right here, okay. So don't forget that this is a liquidity. So the market will usually come down to mitigate that, right? Okay. So the same thing is right here. This is the liquidity. Like this. So without hunting the liquidity present in the structure, why should the market go up? That's the question you should ask yourself, right? Don't forget this key rule in trading. Every time the market wants the best deal to move whether upside or downside, right? So the best deal here is once the market takes this liquidity, the orders here can be mitigated and the market can change its mind to go up. So the minor trend right here has changed from downtrend to uptrend right here, right? So because this is the best deal the market is getting. So if you trade like use 3-4 limit entries right here, then obviously you'll blow your account. That's the best thing that's going to happen for you. Okay, so this is the 80% order block. Okay, this entire spear, this can be considered as an 80% order block. This is nothing but the 50% order block situation. So how should you approach this? Like I said, let's go to 5 minutes. This is the time frame. 5 minutes is the time frame that you should use for taking stop entries in the market. So this is a 50% order block. Let's not forget this order block I'm talking about. This is 50% order block, and this is within our trading horse, right? So we will look forward to take entries in this point of interest, which is this order block. So like I said, don't take limit entries in these kinds of order block. Let's use stop entries. So how you should use stop entries, I have made a video on that one. So to keep it simple, after the candle mitigates your order block, just put the entry on top of this candle, and the stop loss can be like about 2 to 3 pips. You can give breathing space for the market. So it can be like this, okay? So what happens? Obviously the market goes up, tags you in the trade, and it gives about 3.5 RR, which is good. So the thing is, guys, if you're thinking that even limit entry works in this situation, yes, of course it's true, but you should not use limit entries. I'm just showing this for an example. You should not use limit entries right here. Also, if you see in this order block, you should not use limit entries. Instead, you should use 1 minute confirmation entries. Let me go and check that one out. Okay. So if we see here, this is a 50% order block, right? So what happened here? The market kept on coming down. It accumulated some structures right here. It broke this low. And then when the market breaks this high, you can take this as a choch in 1 minute time frame. And then what you can do, take your fibs, put it from this low to this high. Take your limit entries, put the entry from here, keep the stops here. That's it. This is how you should trade these two separate order blocks, right? So guys, this is how you should trade the markets. If you keep on using limit entries, you'll keep on blowing your accounts. So use different types of entries for different scenarios in the market. Don't forget about the 50% win rate and the 80% win rate order blocks, right? Okay. So guys, that's all for this video. Hope you learned something new. See you guys in the next one.